Our next guest says that Europe is facing an existential crisis in the wake of the Russia-Ukraine conflict, and that European energy infrastructure will have to fundamentally be revamped. So what will that mean for the markets, and what should you have exposure to right now? Joining us to break it all down is Jens Nordvig, Exante Data founder and CEO. Jens, it's great to have you here.
Thanks for having me.
How should we think about Europe's future and this vulnerability here from a national security perspective of its heavy dependence for Russian oil and gas?
Yeah, this is an extremely challenging time for Europe. And it's not so much because Europe export a lot to Russia. Like, exports to Russia as a percent of GDP is about 1%. So that shock is probably manageable. But the problem is that about 40% of certain energy supplies come from Russia. And it is going to be very, very difficult to replace those quickly. And even just before we went on air here today, there was a headline from a Russian spokesperson saying that they might cut those supplies, right? So that could be a major, major disruption to the European economy because it's going to be hard to keep factories running, and all the other energy users are going to be potentially in trouble if we don't have that Russian gas. That's the reason why European markets are down so much in the last 2 weeks.
What can they do about it? There was a report circulating that Europe is mapping out a path to cut its dependence on Russia dramatically, I think 80%, according to the European Commission. Is that possible?
Yes.
And how long would that take?
I think the 80% is a kind of goal, right? So clearly policymakers in Europe and the citizens across European countries would like to get this exposure down. This dependence on Russia is not something that is very nice to have in a situation like you have here, with the border just wall literally right next to the EU. So there's going to be a whole host of initiatives. Some of those initiatives are going to be reducing demand. Japan went through a similar situation when they had their nuclear accident and they had to cut demand. And then there's going to be a lot of efforts to substitute, right? So LNG, potentially from the US, is going to be a one source substitution. European debate is very focused on renewable energies, right? So speeding up that process. But none of these initiatives is something you can do from one day to the other, or even from one year to another. So they're going to do as much as they can this year, but it's going to end up being a multi-year process.
So as I understand it, at your new firm, you're crunching all of this data and providing institutional clients with the analysis and recommendations. A lot of money has flooded out of the euro and European stocks. Do you stick with that trend, or do you see any potential buying opportunities just because a lot of this has been factored in?
Yeah, so literally since the night where we saw the first shells come into Ukrainian territory, we've been saying that this is a big problem for duration, like essentially global bond yield is probably going to reset lower. And we've said the European equities were going to potentially be facing a very significant challenge. But here we are, and things are moving very, very fast, right? So if you compare how European stocks have performed versus US stocks over the last 2 weeks, it's literally the worst performance pretty much ever. Like, you have to go back to the global financial crisis to find something similar, right? So a very big adjustment has taken place. And from here, I think you have to look at, okay, are those energy supplies really going to be disrupted in a way where we're going to be facing sort of a quick recession in Europe? Or is this more the market having priced some probability of the worst case scenario, and it's not going to transpire? I think that's going to set the tone for equities. But we've already had a very, very big move.
Which is it?
So I don't think the Russians are going to cut off the gas. I think they're threatening to do it as a kind of negotiating tactic now. But I think they are creating a lot of challenges for themselves. They will create an even bigger challenge for themselves if they cut off the gas. So I think most likely that gas will continue to flow, and the Europeans will sort of manage to limit their dependence on it over time, but it's not going to be a binary cutoff that's going to hurt the European economy in a very, very dramatic way from one day to the other.
Sounds like you might be looking to buy. Jens, we know each other for a long time because of our Forex backgrounds. You're a pro on foreign exchange. We have to talk about the crash of the currency happening right now, the Russian ruble obviously being cut off from the global financial system. This currency was $1 to set in the 70s at the beginning of the year. It's been in free fall. It's now $1 to 140. So we're talking about like 0.7 of a cent if you take it the other way to the U.S. dollar. What does that do to an economy, and how do you come back from that?
When you see your currency fall so sharply, nobody want to really have savings in that currency, right? So then you're going to face a situation where people are going to get their money out if they can in the future. So now we're going to have persistent pressure on the ruble, almost irrespective of what policies are put in place. Like, we cannot reverse this shock that has already happened. And we're going to have capital controls, and once you have capital controls in place, it's very hard to lift them. So this is a currency that is in very serious trouble. And even the countries in Eastern Europe that don't have the exact same situation as Russia, they are seeing big contagion effects, like Poland, Hungary, other Eastern European countries. They are seeing very, very dramatic pressure on their currencies, some of the worst pressure I've seen in my entire career. So for those assets, this is some of the most dramatic I've seen for 20 years, really.
Is that an opportunity?
So I think for the euro, we've seen a pretty big move down now over the last couple of weeks. And if we compare to what we've seen around the euro crisis, like you and I both covered the euro crisis, like 2010, 11, 13, those years, right now we've seen a kind of weakness. So a reserve currency like the euro, if they can avoid having this dramatic disruption in the energy flow we spoke about a minute ago, probably the euro is going to start to see some degree of consolidation. It tends to be the case that you don't have the euro just going down 10% in a couple of weeks. That happens to emerging market currencies. That happens to certainly the ruble. But the euro is reserve currency, and it tends to be a much more stable creature, even in the face of these significant shocks you have.
Jens Nordvig, always good to have you. Nice to see you.
Thank you.